Lehman Brothers is going bankrupt, and financial markets from Asia to Europe are doing their utmost to prevent Monday from turning from dark to black. Employees of America's fourth largest investment bank saw the writing on the wall late Sunday after talks to pull them back from the abyss collapsed.
Lehman, like so many other investment banks and banks, really got, quite frankly, caught up in the housing bubble. But like every bubble, the bubble ended, and now we're seeing the downside of that bubble.
As Lehman Brothers secured many of those mortgages, the result was more than $60 billion in losses. Lehman Brothers now go to court, where a judge will take control of the bank until its assets are sold. The implications could be profound. Monday will be a difficult day to face for Lehman's thousands of shareholders and more than 25,000 employees. Many had hoped this day would never come. Clayton Swisher, Al Jazeera.
Hi, I'm Evelyn, and today we will talk about the collapse of Lehman Brothers. The collapse of Lehman Brothers is a significant event in the history of the global financial system. On September 15, 2008, Lehman Brothers, a Wall Street investment bank, filed for bankruptcy, marking one of the largest bankruptcies in history. Lehman Brothers was founded in 1844 as a general store in Montgomery, Alabama. Over the years, the company expanded into commodities trading and brokerage services, eventually becoming an investment bank. Despite facing numerous challenges, including the Great Depressions and World War II, Lehman Brothers survived and thrived. In the early 2000s, Lehman Brothers began to aggressively invest in mortgage-backed security and collateral debt obligations. The company acquired 5 mortgage lenders, including BNC Mortgage and Aurora Loan Services, which specialize in Alt-A loans. These loans were made to borrowers without full documentation. At first, the acquisition seemed prescient, and Lehman's real estate business enabled revenue in the capital markets unit to surge 56% from 2004 to 2006. However, by the first quarter of 2007, cracks in the U.S. housing market were already becoming apparent. Defaults on subprime mortgage began to rise to a 7-year high. Despite this, Lehman reported record profits every year from 2005 to 2007. In 2007, it announced $4.2 billion in net income on $19.3 billion in revenue. Lehman stock fell sharply. During that month, the company eliminated 1,200 mortgage-related jobs and shut down its BNC unit. It also suspended wholesale and correspondent lending activities by its Alt-A lender Aurora. Even as the correction in the U.S. housing market gained momentum, Lehman continued to be a major player in the mortgage market. On September 15, 2008, Lehman Brothers filed for bankruptcy with $639 billion in assets and $619 billion in debt. The collapse of Lehman Brothers sent shockwaves through the global financial markets, leading to a credit freeze, a decline in customer spending, and a significant increase in unemployment. The collapse of Lehman Brothers had a significant impact on the global economy. It led to a decline in stock markets, a decrease in consumer spending, and an increase in unemployment. The crisis also led to a significant increase in government debt and a decline in economic output. The collapse of Lehman Brothers highlights the importance of prudent risk management, effective regulation, and transparency in financial markets. It also underscores the need for financial institutions to maintain adequate capital buffers and to avoid excessive leverage. So, who was involved in the collapse of Lehman Brothers? First, of course, it's Lehman Brothers, a Wall Street investment bank. Second, Richard Fuld, CEO of Lehman Brothers. Third, Christopher Cox, Chairman of the Securities and Exchange Commission, or SEC. Fourth, Timothy Geithner, President of the Federal Reserve Bank of New York. And fifth, Henry Paulson, Secretary of the Treasury. And how the fraud was uncovered? The first is Repo 105. Lehman Brothers used an accounting technique called Repo 105 to temporarily remove toxic assets from its balance sheet. Second, SEC investigation. The SEC launched an investigation into Lehman's accounting practices in 2008. Third, bankruptcy filing. Lehman's bankruptcy filing revealed the extent of its toxic assets and the use of Repo 105. The fourth, Anton Felucas report. In 2010, Anton Felucas, the court-appointed examiner, released a report detailing Lehman's use of Repo 105 and other accounting irregularities. So, the conclusion is the collapse of Lehman Brothers was a complex event involving a combination of factors, including excessive risk-taking, poor regulation, and accounting irregularities. The use of Repo 105 and other accounting techniques allowed Lehman to hide the true extent of its toxic asset, ultimately contributing to its downfall.